Welcome to another episode of Insurance Questions Podcast, episode 98. Holy cow! It's your buddy Eddie Buffalo, Donnie Lowe, and Sarah is mobile today. I'm driving in my car today.
I'm not driving. I'm parked because that's dangerous to drive and try to do a video podcast.
Right. And remember, all the comments and statements by Eddie Buffalo, Donnie Lowe, and Sassy Sarah are purely for entertainment purposes.
And like, subscribe, follow, share, do all the things. Bother Eddie on TikTok. It's all okay.
And
Do your thing,
download
Donnie.
the
What you
video.
said you were going to do.
Yeah, download the videos too.
Yes, that helps our analytics so we can continue to do the show. So today is Thursday, June 27th, 2024. And what do we do on Thursdays, Don?
Well, I'll pretend that I'm
Say it.
you. It's not nudity. Nudity.
Say it.
It's annuity.
Say it.
Annuity.
Say it. Okay, I got a question for you.
Okay.
How much? Well, because, annuities have been getting such a bad rap the past couple of years because, got to get the Bitcoin, got to get this, got to get that. Just out of curiosity, do you know how much annuities are in force in the United States of America?
I would say, I know there are a lot. I would say $700 billion worth.
700 billion?
Yes.
Wow, that's a lot. But now you're wrong. Sarah, what do you think? I know you don't know numbers.
So for our audience, we tried to record it yesterday and it has bad video. So I'm just going to guess 300 or 3 trillion. 3 trillion, right? I remember the answer.
All right, just say it.
I said 3 trillion.
Well, you're chopping up a little bit. So hopefully our new software, this will be a good test because I've seen Donnie be choppy, you be choppy, and Hong Kong Fooey. So yes, Sarah, you were right. Yes. So here's my question. The next question for you, Don. Is this annuities? Are they backed up with money? What do these mutual insurance companies have to do to sell the annuities to make sure that people get their money?
The insurance companies absolutely have to have reserve funds. So if one company has, say, $1 billion of annuities, they have to have in reserve $1 billion. It's the same thing with life insurance. Right.
Mm-hmm. Last night, I actually went to a meeting, and there was a insurance agent from another agency, and I just sat there nicely. In fact, he asked me a couple questions because he didn't know, and when he got to talking about, I could tell he didn't like selling annuities because it's an annuity stuff, this mumbo jumbo. I'm like, wow, great presentation. That's really awesome. I guess why we're talking about annuities today is because how many people know people that their retirement is SSI? I know people that are living like that.
Yes.
And when SSI was put together by the government, it wasn't made to be your retirement. A lot of people use it that way. It was made to be a supplement to what you have. Meaning, say, Donnie's a rich guy. He's got his annuities. He starts getting his SSIs. He doesn't need it. It's pocket change for him. But he also has annuity and a retirement from his business. So wouldn't you rather have all three instead of one? I know you love your cat, Sarah, but you don't want to be eating no cat food, do you, girl?
Oh, whatever. Like, I'm getting to the point to where I don't want cats or animals because I don't want the responsibility. So if I start getting SI and I don't have any animals, I'm just going to die if I can't afford food. So
what about Robin? Does she love cat food?
I don't know. I doubt that. Weirdly enough, I saw a video this weekend about the end of the world, and a girl was eating cat food, and I'm like, that's disgusting. I'd rather starve. Yeah.
Gross.
Wasn't one of our former vice presidents' mother eating cat food?
You believe that, though? I don't know.
I know.
Why are you getting all political on us, Donnie?
I'm not. I'm just saying it could have been a movie star's mother eating cat food.
You're always trouble on these podcasts. Can't you just fly right for once, Don, and be nice?
I'll try.
So let me ask you this, Don. What's the hugest mistake when people are thinking about buying an annuity?
They don't seek professional advice. They think they see a commercial on TV and then they know everything about the annuities.
So if you see one annuity, you just say, okay, I want that. You don't comparison shop or anything?
I know. Exactly.
That's another thing. There's so many different types of annuities out there that before you make that decision with your financial professional, it's good to look at all options, look at their forecast, and remember that that's not 100% of what's going to happen. That's what they're forecasting. Just like the weather. It might rain. It might be sunny. It might snow if you're in Buffalo, so all kinds of crazy stuff like that. Let me ask you this, Don. Another question that people happen to wonder is, what about fees? What do I mean by that, Don?
Well, with annuities, and like a lot of other financial products, there can be fees that you have to pay either up front. They're built into the cost of whatever financial product is, or if you want to take money out earlier than what the contract is for. So, for example, with an annuity, there is what they call a surrender fee. And if you have let's say a fixed annuity that is a 10-year annuity, and in year 3, you decide that you want to take money out, you will be charged a fee in most cases. And
how high could that go, Don? How's the highest you've seen? Because I've seen 40%.
Yeah, I haven't seen that high, but I have seen 10%. And so as an example, an average annuity, maybe a 10-year annuity, if you try to take out money in the first year, the fee is 10%. The second year, it's 9%. The third year, it's 3%. Excuse me, 10%, 9%, 8%, kind of goes in reverse of the length of the term.
So if you're looking for a product that's liquid, annuity is not the way to go.
Correct. Mm-hmm. But it is a very low risk financial product because it's a guaranteed. You get a guaranteed return on your money.
Mm-hmm. Now, what we have talked about in the past, and I'd like to go over that again, is say if somebody's trying to get term insurance or whole life insurance, and just because of the meds they're on, the type of health they have, maybe their weight, just can't get it. Or if they can get it, it has been rated so high that you don't want to get it. Why would an annuity be a good option for somebody in that case?
Well, you get some of the same benefits of a life insurance policy.
Like what, Don?
Well, you can have a death benefit assigned, so somebody can be a beneficiary should you pass. You have income that is tax deferred, and the beauty of it is that you do not have to go through any type of medical underwriting.
Right.
And that's a great thing for
some people. I just buy the annuity, and they say, okay, there's no hoops that we got to make sure everything's cool.
Well, there are some things that, it's got to be in your best interest. And if you're going to, say, put in, 90% of all the money that you have, whether it's in a, retirement plan or just CDs or whatever, cash in a checking account, that's not a good best interest for you. It's not suitable for you. So if you want to put maybe 50% in or 40% in of whatever cash you have, that might be more suitable.
Yeah, and the big difference also with life insurance, you have either a 10, 12, or 14-day I've seen look back period where, Sarah, here's your policy. And in 10
Sure.
days, she's like, I don't want it. And then you just get your money back.
Right.
Annuity, because they do go through all those steps to make sure that it's right for you. There's no gibsy backsies.
But what if I wanna? But what if I wanna?
Penalty. You're going to the penalty box and think about what you did. And the penalty box.
I mean, is the penalty box like in hockey? I can actually just go and punch somebody to go to the penalty box, or it's just because I want my money back.
Sure. And if you want to punch me, that's okay, Sarah. Take your best shot, baby. Take your best. So
Can you
sounds like a game plan. I just got to make sure I have to run faster than you, since you box and you break boxing bags all the time.
You're stealing Donnie's line. Gotta be faster than Eddie. So let me ask you this, Don. Okay, I'm married to Sarah. Hell no.
Oh no, that's like brother sister thing. Pick somebody else. No.
You're the only girl on here. Okay. Me and Don are married. He's my partner.
There we go.
Whoa.
But he's the girl in the relationship. Just
oh my God.
We take
Sorry, Don.
Thanks, Sarah. Oh my God.
And I make Don my beneficiary because no, let's swap that because he's like maybe a couple months older than me, right, Don? So we'll make Don the buyer and make me the beneficiary because I'm going to live longer, hopefully, and say, Don dies. What do I have to do? What can I do? What have you seen done, Don? Don? That don't sound right. Don.
I've never seen Don.
The name is Don.
Well,
come down and buy my car.
So it depends on what stage you are in with the annuity. If you're in the accumulation phase of the annuity, whatever funds are there, since you would be the beneficiary, those funds would go to you. If you're saying,
what if I don't want them?
If you don't want the funds, they still, because legally you're the beneficiary, they do go to you. But you can decide.
So I become the owner?
Pardon?
Do I become the owner?
No, I believe. Oh, yes, you do become the owner. You do become the owner.
Now, so basically, folks, is what we're going through here. What I'm trying to say is that we're trying to not pay taxes on this stuff. And by pushing it ahead like that, if you do want to, maybe you just want to take the capital gains and just do the tax on the capital gains and keep the rest of the annuity in there and keep on going. Let me ask you this, Don. Once you croak off and I'm the owner, can I name another beneficiary? My sister, Sarah? No, she'll probably kill me. So no, let's come up with the Kate. Oh, Kate,
yeah,
probably...
no. Add me as a beneficiary. And if you end up choking, do not come search for me.
We're going with LB because she loves me and I know she won't kill me.
I will totally share the money with her though, so you don't know.
So can I do something like that, Don?
So I got sidetracked with all these
all these death threats
what is the
that
question?
are being thrown around here. I'm going to take over then, Don. So yes. So once I croak off and Allie becomes the owner of the policy, that's it.
Yes.
There is no more. She doesn't have to take all the proceeds. She can continue to keep the money in there until she has to do her RMDs. What's an RMD, Don?
RMD is required.
I'm new at this.
And required minimum distribution. And what that
has nothing to do with records, folks. No 33, no 78, no 45.
No. So if you have a retirement fund, a 401k, a 403b, if you're in the education arena, an IRA, when you reach a certain age, and it depends on the year that you were born, but right now the age is 73, you must take a certain percentage out of your retirement funds because the government...
Which Donnie means 72 and a half in real time.
For
real.
If because you have not paid taxes on that money, the government wants their money. So that's a way that they're going to get the
Yeah, they
money
do.
by just forcing that you have to take some money out.
So basically, with annuities, we are still trying to. Oh, speak of the devil. Katie, you're on the line. You're on the show.
Caller number
Say hi to
22.
everybody. Oh, hang on. So, Katie, are you there?
Yeah, sorry, I was sleeping.
First of all, how are you feeling today? Well, we're talking about annuities, and when people die, can you get another beneficiary? You and Sarah are out because you'd want the money, and Sarah just wanted to go in. So, Allie will be the beneficiary. You good with that?
As long as I get money.
As long as she gets money. You hear that, folks? She's definitely my daughter. Yes. Well, listen, we're going to finish the show. Make sure you watch Billy Sheen's show, and let me know what you think about it, okay? All right, honey. Love you. Bye. Sorry about that. So, yeah, basically what we're trying to do is push the taxable amount by going into different owners. Or like I said, say you just want the capital gains. What is a capital gain? What am I talking about, Don?
We'll let the accountant answer that one.
Whoa. Pass the buck.
Wow.
Well,
At least I get to say something because, I don't know much about annuities and you're just going back and forth. So capital gains is basically money that you get that's outside of what you contributed to it. That's the easiest way to explain it to non-accountants. So if you, let's say, paid $120,000 and everything it raised up to $150,000, you're going to pay the capital gains on the $30,000 that was made.
Perfect.
Very good, Sarah. You get A++ today.
Yay, second plus. It's awesome.
You do. So, let me ask you this, Don. Say I have a life insurance policy, a whole life policy, and it has a bunch of dividends in it. And, it's like, you know what? I already have insurance through work, so I feel like I have too much insurance. So what I'm going to do is I'm going to cash in that policy and buy an annuity. Can I just transfer those funds over to annuity?
No.
Just by doing paperwork?
No, you cannot legally do that.
What do you got to do?
Well, if you cash out your life insurance policy, then, but you cannot directly transfer to an annuity. It'd have to be a separate transaction. However, the insurance company may ask to see, where did these funds come from? So you have to be careful.
Oh, most definitely they will.
Yeah. So no, you cannot do that. However, you can fund a life insurance policy from an annuity.
Oh, you're good, Don. I didn't even have to prompt you on that.
Yeah.
Good job.
A lot of people do that, and especially if you have a higher net worth, and they'll say, you know what, I just want to pay on my premium on my life insurance. Can I do it all up front? Some companies don't allow that. Some states do not allow that. However, what you can do is put a block of money into an annuity and then have the annuity make the payment on an annual basis right to the insurance company on the policy. So typically when they do that, it's for 10 or 12 years premium payment, and then the life insurance policy is done, the annuity is depleted, and you just pay small capital gains tax from the proceeds on the annuity.
Let me ask you another thing, Don. Okay, so I was paying into my annuity for 10 years. It did very well. I got to the end of the 10 years. But you know what? I don't want to take all that money all at once, because I'll just go crazy, go to the casino, buy penny candy and moon pies. It just ain't going to happen, So is there any way to have that structured that I get a check just like I'm getting paid?
Oh, absolutely. And that's the whole idea behind the annuity, is that you get regular payments from the annuity. So it can be one annual payment. Most people do monthly payments, and especially if they're retired, it's just an additional funding source for their retirement, and it's a beautiful thing,
So
really.
can you do that with anything else? Can you do that with like term insurance?
You cannot do that with term insurance. You can do that, however, with permanent insurance, and more
Why is
specifically,
that, Don?
well,
Why?
well
I'm so confused.
so you can structure the cash value from your whole life policy to be dispensed to
Yes.
you on a regular basis once you have enough cash
And that's
value
coming
built
out
up,
tax free, Don?
and that does come to you on a tax-free basis as long as you keep that policy going. You don't close the policy.
Is there any time there's a taxable event when you're getting the funds out of the whole life policy?
Well, for example, if you have a whole life policy that you've taken a loan out on, and you decide that you no longer want to keep that policy or you can't afford to keep it, so you decide to surrender the policy, whatever
What happens, tax lady?
what happens?
Let him finish his thought.
I try to include you, Sarah. All
Well,
right.
she may not
I'm
know
not getting
this.
nasty
She may or may
like
not
I
know.
normally do.
Well, no, I know, but he was like in the middle of a sentence. Let the man finish the thought, and then I can go
Yeah,
over the
I
tax
heard him enough today.
implications.
I heard him enough today.
Yeah, all right, so go on. So if somebody has a loan and they decide to surrender their policy on a whole life policy.
So, yeah, so basically what happens is it gets counted as income. You get a little form that you have to add to your tax return, and then you pay taxes on it.
And what is
One
that
of the
nasty
things,
number?
huh?
1099.
Oh my God.
It's not a
A
1099.
1099, since you're whispering it into the microphone, but you keep cutting people off. So what's funny is one of the things when they were talking about student loan forgiveness, that was one of the things I was worried about. And I was telling people, like, hey, pay attention to the laws that are going to come through if they are going to pass the laws, because if it's forgiven, it could possibly go in your tax return. And if they're forgiving $20,000, $30,000, you have to count it as income. You
I
never
didn't know
know how the government, yeah. Well, so for the most part, it's not. But because of the way they were forgiving it, I wasn't sure if they were going to put that language in or not. So the problem that comes into it is if they don't state it specifically, I always go on the assumption of you're going to have to report it, kind of like the illegal activities. I don't tell you to do illegal activities. I just tell you you need to report the income from said illegal activities. It kind of runs into the same thing of if something's forgiven, just know that the IRS is always going to tax everything. So just assume you're going to pay taxes on everything.
So when I make money from slap fight championships and from bare knuckle boxing, I gotta claim that.
Yeah, you got to claim that. That's income. Even if you win a $4,000 TV, you have to claim the $4,000 as cash equivalent and pay taxes on the TV.
I know I've asked you this before, Sarah, and I forget about it. Like I won like $7,500 one time from the University of Buffalo for a raffle. Yeah, it was a 50-50 raffle. And they did not give me a 1099. They gave me something they said it equated to what is given to people that like win bingo of all things.
Okay,
You
so
know?
that's a different form. It slips my mind of what it's called, but there is a different form that's given for gambling. I want to say it's a 1099-G. I think it's still the 1099s, but
I just can't, it was so long
right
ago I can't remember either. You know.
Yeah, I have a few clients who gamble, and they make a lot of good winnings. But it's one of those of it's just another form because, like I said, they want to tax everything. I will say for the people who like to gamble who are listening, the casino or wherever you go can take taxes and pay state and federal taxes from your winnings. I would just say just do that because if you lose a lot of money, you get a refund for those taxes instead of getting a big tax bill at the end of the year because you won a lot.
What about the Indian casinos, Sarah? I mean, we have the Senecas in Buffalo, and they have Choctaw here in Oklahoma. Am I saying that right? I know I'm probably not saying it right. So do they have to claim it to the government? Because, I mean, they're a sovereign nation.
They're a sovereign nation, but you're not a part of the nation. You're just there gambling. So you still have the tax obligation. And
but they don't do anything with it.
I know that the people who go to Oklahoma have to file a state Oklahoma return to show that they won the money and paid the taxes on it. I
That's
haven't
true.
dealt. I don't know. So they go to the Choctaw down here. I don't know if that's on the Indian reservation, because like I don't gamble. So I would just say if they offer to take out the taxes or ask them if they can take out the taxes is the safest bet.
Well, because I know even in the city of Buffalo, and Don, if you've been downtown lately, that Seneca's actually opened up a gas station,
Yes.
and they have cheaper gas, cheaper cigarettes, and things like that. So wherever they build a building, isn't that Indian territory?
It depends on the
That is
agreement they have
outside
with
my
the state.
tax knowledge. Yeah.
I have a couple people that'd be a good show to have to see what the tax implications are when you are gambling at an Indian casino. Because I mean they're everywhere.
I would even
But I don't know how we got onto Indian casinos because this is about nudities and
I can,
Donnie
I
getting
can,
nude.
I
I'm
can
not
use that for the.
getting Sarah. We're rolling the dice on that.
I was going to say I can look a lot of stuff up for research, and then we can cover it on Tuesday.
Cause Sarah is our Google girl.
Yes. Well, because the only reason I don't want to speak on it is because I have to look at the IRS code and see kind of what the standard is, because the IRS may not be very specific on it in code, but if it went through tax court and there's a judgment on it, that's typically what they go off of, but it depends on the area as well. So
Yeah.
I'll cover all that on Tuesday. Fun stuff.
So, okay, we're done with the nudities. I want to talk about next week because it is the holiday coming out. So Tuesday, we're going to do Sarah's tax tips, tax questions podcast, along with insurance questions podcast. And then the next day on our insurance questions podcast, what episode is it?
100.
Come on. 100. We're almost at the number of Donnie's age.
Almost.
So we're getting close. So
hold on, you do remember earlier in the podcast you said he was only a few months older than you. So does that mean that you're close to 100 as well, sir?
I am. I'm old and decrepit like the Crypt Keeper. Yes, I am. I am. Sarah.
That was very good. That should be your costume for Halloween.
Oh, awesome. And then we're going to give everybody a break and not have a show on July 4th, which we won't be broadcasting on. We will going to be showing a show that we're taping on Friday. And I know Donnie's going to be there. Are you going to be able to make it, Sarah, for our patriotic show?
You haven't given me a time and I don't know. So I'll try.
Right. We're going to be talking to retired military man, Gregory Traves. He has fantastic stories. And this is the crazy thing. He wasn't born here.
Oh.
Got to tune in and find out about that one. And what was he doing in Iraq? He's got some great stories, so we're going to have to limit it to 30 minutes. Oh, it's 30 days. Greg could talk for 30 days. Yes, he could. He could. So I think we're going to wrap it up. How did you like to do technology, guys? I want to see what our listeners think of it, too.
It's good. It's just really hard to use it on the phone because my microphone I had to take my case off, so I keep dropping my phone.
But
other than that, the software is fine. It's user error.
And there was a couple times where you guys were choppy, and I don't know if I was on my end. So I'm going to wonder what Tyler, our creator, is going to be able to do with that, because I was explaining to everybody before the show that we are getting like our own video track being recorded for each one of us. So if one of them has problems, we can just keep on moving on, and we don't have to redo a show like we did today.
You could just delete me.
Yeah, we just get rid of Don. Are you gonna miss them? I don't think so. I mean, if it was me or Sarah, yeah, you'd miss us because of our big mouths.
Oh.
So we're gonna end the show, and like we always say, if you like working with people that are just like you, or people that are odd like us, You can reach us at www.ebiagency.com, 716-306-2020, and you hit the partner page. Look, I'm not even doing my Texas accent for you today, Sarah. You
That's
hit the
awesome.
Should I do the Crypt Keeper? And then you go to Sarah's page at the partner section and find out about evil taxes and what you gotta pay, and you can do illegal stuff. Claim it.
Taxes are evil. Yes, I do agree with that.
So until we meet again, tune in Tuesday for episode number 99. And please, if you have any ideas of what you'd like to see us do on episode 100, we're going to try to mix it up, because on episode 50, we had a bunch of people on the screen, and that really didn't work really good. So I don't know if we're going to have like extra people on, or we're just going to do clips during the video. So that's all up to our boss, Tyler, our creator.
That's
right. You hear that, Tyler? Yeah, I'm talking to you, buddy. Yes. So once again, thank you for tuning in, and we'll see everybody Tuesday. Have a wonderful weekend.
Ciao.
Okay, now I have to find a new button, Don. Where did you put it?
I hit it on you.
Son of a... got it. It's a big orange button, so I can't miss it. All right. But yet I did. All right, bye, everybody. Be safe.